Hello, everyone. Happy Thursday morning. Good morning, Path Trading Partners with the test. Good morning, Jacob. Thanks for responding to that test. Good morning, Alan. Good morning, Tony. Boy, chat not very active, but people in the background. So let's just get right to it. Jobless claims coming out for initial and continuing, much better than expected. So market continues its sell-off with the better than expected data. Uh-oh, maybe the Fed is going to have to hike again. So that's where we sit right now. Good morning, Options 22. Good morning, Sterling. We also have Apple getting crushed with the news out of China, but still not broken key support. We remember we have the Apple event next week. It's interesting because it normally rallies into that event, then turns around. Then now we're getting a turnaround a little early based off the banning the iPhone for government use in more places. There is lots of Fed speak today. So with the market, I mean, now we're in a little more substantial pullback. Let's see if they try to play both sides. Oh, we're really data dependent, blah, blah, blah. We're not looking at anything for September, but maybe November. We'll see. I don't even think this is all of them. Harker, Williams, Bostic, Bowman. I know those are on this chart. Let me look over here. I think there were some more, if you bear with me for 1 second. We've got Goolsby also. We've got Logan. So we have some additional ones that aren't even on here. And then tomorrow, it's a pretty quiet day. We got Barr speaking in the morning and wholesale inventories. You see the mega caps. So far, not faring so well. Nvidia also off the China, stuff out of China is pulling back, but still not broken the key support, not triggered the double yet. Apple, Tesla with guiding lower for Q3 deliveries. So we'll see how that plays out. The groups, let me do a refresh since look at this. Only healthcare positive. Everything else, this is definitely going into the open as a risk on day. Get out of the risky assets. That's how the market's viewing it. Fed watch. If you look at this, it's interesting now because November, if you look between 25 and 50 basis point hike, it's roughly 50-50. So I know this is 45, but you got to add up because they're not going to do a 50 basis point hike. So I'm really looking at it. The odds of a 25 are roughly 50-50 for either November, December, and even holding into potentially January. So that's where I'm looking at. It'll be interesting to see after all the Fed speak today what that sits at. And remember, under 2 weeks to go before the rate hike, fear and greed with the pullback back to neutral mode. All right. Yeah, GameStop with a beat yesterday, but still in consolidation. SAIC this morning, nothing really going on here. DocuSign after the close and Restoration Hardware. And then Kroger tomorrow morning. So again, we're in quiet, really closing down earnings season. Let's see who else is here. Good morning, Richard. Good morning, Anissa. Oh, let's see. Yeah, Sterling's putting in the jobless claims. Labor costs 2.2 versus 1.9, forecast 1.6. I didn't mention that one. So labor costs still going up, which again, these labor prints were pretty strong this week. So that's where we sit. All right. So keep following the chat for Sterling with update in the news. Key level now. Remember, we hit the stop raise level, the invalidation point. I'm really focused. 44.24 on a closing basis. Technically, 44.24.25. I will even be watching that intraday. But anywhere between this 44.49 and 44.24, I'll be watching for if we do get any shorter-term bottoming patterns. However, not going to fight any momentum to the downside. I mean, going into the open, we really got to get above this 44.50 level again before I'd rather, unless we get a decent bottoming formation, I'm not looking for anything really on the bullish or a bottoming a more substantial bottoming pattern unless it can get above that 44.50 area. That was a spike down yesterday morning, and then we got the little bounce and then the rollover. Now that's below that key low. But overall, remember, anywhere between the 50 and the 62.5 harmonic, we can start looking for reversal patterns. If we close below the 62.5 harmonic, I will watch for a continued pullback. Daily cycles still not at a bottom and definitely not turning up yet, but we are getting in more in the bottoming area, and the weeklies are still heading up. So if we do get some kind of waning momentum over the next couple days, I'll be looking for more of a bounce play next week. And now if the double is invalidated, then I will watch more for a minor bounce play. If the double's still in play, then we could still see a retest of the high area, not the highs, the high area from July. But this is definitely doing a little more short-term technical damage unless the market can try to put something in over the next couple days and not break those key levels. I know this chart's a little cluttered, but the key area I'm watching into the open, you can see if I take this off real quick, and this off this one off real quick. This one, we can see roughly the overall, the 50% harmonic, and did not hit the stop raise level yet. So this is not a stop level. If we got to close below this 15,000, it does not technically invalidate the pattern in the NASDAQ. You need a close below 14,907. But based off this little up move, I'm paying attention to about 15,135 and then 15,000 for the major support area. Since we broke below the candle base yesterday, we bounced off it, and this morning we've got the rollover play. You can see the momentum coming in with those jobless numbers. So let me get back on some of my other levels. Here we go. All right, for any bounces, both back to the S&P. Again, S&P, it was at 44.49, and then the key level is 44.70 if you get a bigger bounce over the next couple days. In the NASDAQ, the bigger bounce area is about 15.3 to about 15.335. So that's what I'm focusing on, both for support and resistance. The Dow closing technically by 1 point below the 62.5 yesterday. So it'll be interesting to see if we do pull back to this 34,201 in the Dow. Now, would that is this in double bottom territory? Well, based off this side, no, because this cuts through the wicks. I would still consider using this area just as an initial target, but these are much lower probability then. So if it did take out, if this does pull back and then eventually takes out the high from the end of August, the 31st of August, I'd be using harmonics, retracements as the higher targets, not doubles. Just pointing that out. Key levels on the Dow's 34,480 to 34,500 on a bounce, and then 34,575. Pullback, yesterday's lows right around the 75% harmonic, 34,320, 34,340, and then 34,201. Russell, not closing below 62.5 yesterday, but today dropping below there. Still, I'm going to be watching to see if it closes below 1870. If it does, I'm really watching for a retest of the 200. And if we break down intraday with bearish momentum, I'm watching for the retest of the 200 coming in about 1853, 1854 area. Rally mode, the stronger rally area is 1882. The minor rally area is about 1875. The VIX, this is, again, yesterday we spiked up and closed below 1481, but now we're solidly above it this morning. So I can't really start focusing on a more substantial bottom until this can drop back below 1480. Other than there, if this continues in the open and we get momentum bars to the downside, I'll be watching for the pullback to continue. The DAX, The DAX, let's just see, continues its pullback. No close below the 62.5 yesterday, but the trade below the 75 today. So this pattern has been invalidated. So there's one that didn't work. And the DAX, so even on the next bounce, this is a major resistance area coming in now. You can even see right around 15,830 is going to be key, even running up on any bounce play. The notes, interesting enough, the yields are rolling even after these, rolling over a bit after this job report, but we do in the yields have a little mini double top. So does that mean we're bearish yet? No, there's no minor pattern yet. Going to be watching any pullback to about 4.22 in the yield. The notes does not have, the notes futures does not have a double bottom yet. Key resistance is still right about this 110.08, key support 109.20. So I'm between there, not really looking for much, but there's just not a great setup right there. The 10-2s still caught in the middle of consolidation on the bear steepener. The dollar continues its move higher. Not yet quite at the, this is getting really overdone and possibly topping. So I'll be watching for more of a topping pattern going into next week at the dollar. And if we get some relief and the dollar gets at least a pullback move, you'll probably get some kind of bounce in the markets overall. Crude, so far, not yet pushing to the next cluster area, but support levels 885. About 75, and then the major support level is 83.19. The next support level is about 84.39. Starting to watch for a rollover, at least a consolidation top, if not a pullback in there, because we also have the minor target. Natty gas pulling back to key support area. Gold, not much of a minor rotation up, but I'm going to be watching these. If gold closes below 1938.6, we'll watch for the pullback to 200. Other than there, not a fantastic. There's not a lot of great setups going into the end of the week. The Japanese yen 10-year JGB yields still caught at this upper end. Getting a minor pullback in the yen right now. Key support coming in about 146.50. Again, not a lot of great setups. Euro continues its breakdown. I'm watching for a retest of the lows from June at this point. Even any bounce gets looking for rollover plays, and we're nearly at that 200 area on the pound, which is what the target's been for a while. Bitcoin, still nothing. All right, spiders and Qs. Spiders and Qs. Spiders after hitting the second target. Getting the key pullback, the only remaining thing to invalidate it, and this would be the worst case stop I'd use. I would actually, personally have a slightly higher stop, but 440.76 technically invalidates the pattern on the closing basis. But anywhere between 440, 340 to about 440.76, we'll be watching for the bounce. For the spiders, it's coming into a pretty strong support level. We're looking at 443.16 close to the open. 443 is key support. What was this? 443.30 to about 443 is key support. And then it doesn't come into that 440.76. So that's my key support levels on any bounce. Yesterday's low, 443.81. And then the closing price, 446.22. For the Qs, the stop level, the farthest away stop level, 364.51, not even near to 50%. So if we get more weakness in the Qs, 367.75 with the 50. Before that, if we can regain about 371, could get a little interesting in the Qs on a bounce, but the first target would be 372.70. And then if we get the bigger bounce, the next target is 374.74. Tesla also pulling back. Keep talking about watching for the rollover play, watching to see if this breaks 245 area with some momentum going into the open. The key support then is 240, and then if you start losing 240, it starts getting more interesting for Tesla. Nvidia pulling back to the rotation zone yesterday, but today gapping down. So any bounce in Nvidia would be yesterday's lows, first 465 and then to the close. But I'm really keeping an eye to see where we close in relationship to 448.88. If we close below there, we could be retesting eventually the August 15 lows. Apple, big sell bar out of the news, out of the China news yesterday. And look at this, gapping down to 176 this morning on the open. So going to have to flip this around. The key thing, if it does not bounce or it cannot sustain a bounce, it needs to get back above 178.72. Otherwise, 174.21 and then 172s. The other thing I am keeping an eye on, just from the bigger perspective, the Magnificent Five, or the whatever you want to call it. Overall, again, this is on a big pattern basis. This is just equal weighting them, sort of the lazy man's way to do it. But I will be keeping an eye to see if this does trigger based off equal weighting, because that would also be breaking back below the November highs of 21 before the pullback. And that could potentially be out of the way of the weekly rotation zone and trigger this double top area, which could lead to a more substantial pullback, possibly going into, you know what, the end of October timeframe, or mid-October at least. So going to keep an eye on that. But unless that's for the bigger pullbacks. So far you see, yeah, we're getting a little technical damage, but nothing major. But it has formed a double top there. What else? Hey, Christoph. Hey, Jake. What else do we have? Sorry, I just wanted to get through that. AI is down about 20% pre-market after... Oops. Where am I here? Oh, here we go. AI. Yeah, it is down. Really I'd be watching for the reconnect also with this daily 200, and then a close below 24.68 is not good. Not good. So thanks for pointing that out. Where else are we sitting? Oh, your dyslexia? 50. All right, we'll go with 15%. It's still down. All right, so again, overall, if we get continued momentum with the open, going to be watching the tick and the VIX. If we get the S&P, watching for some kind of bottom, but would not get aggressive unless we get a solid bottoming formation with a change in the tick. Okay? And then if it does close today for below 44.24, we'll be watching for at least a continued pullback through tomorrow. All right, that's where we stand. Well, if you listen to the podcast that's dropping next week, you'll hear the seasonals on the we put out the seasonals for going into October. So pay attention to that, Coco. With that, I shall talk to everyone later. Bye for now.